If you are a salaried employee or business owner, you are liable to pay income tax, depending on your tax bracket. I'm sure you are aware of this, but do you know how exactly is your income tax calculated based on the tax slab rates? Let's find out. Hello there, welcome to the Perfect Portfolio. If you're new around here, this channel is all about promoting financial literacy and helping you with personal finance and investing, so please subscribe and hit the notification bell for regular updates. Let's get started by understanding what is tax. So, tax is a source of revenue for the government, which is utilized on defense and military, to provide infrastructure and sanitation facilities, and expenditure towards social welfare causes. Broadly, there are two types of taxes, that is, direct taxes and indirect taxes. Direct tax is collected on the income or wealth of the taxpayer, such as income tax. Indirect tax is paid by the consumer on the purchase of goods and services, such as GST. In this learning video, we will only discuss about direct taxes, that is income tax, and we will understand the computation of income tax of an individual taxpayer based on his or her tax slab rates. In India, we follow a progressive tax policy. This implies that high-income earners are taxed more than low-income ones. As per the new tax regime, the current income tax slab rate are as follows. Please pause the video if required. Basically, your income is progressively taxed in slabs of 2.5 lakh rupees. By doing so, the tax liability increases for individuals with higher incomes, and it also reduces the tax burden of low-income earners. Now, let's understand this concept with the help of an example. Let's assume your annual salary is 18 lakh rupee, then as per your tax slab, you fall in the highest tax bracket and you'd be liable to pay 30% tax for the year. In that case, your tax liability is 18 lakhs into 30%, which equals 5.4 lakhs. Stop. This is wrong. Many taxpayers have a vague idea of how their income tax liability is computed. Let's now understand the correct method of calculating the income tax payable on your annual income of 18 lakhs. Your annual income up to 2.5 lakhs is exempt from tax. On any income between 2.5 lakhs to 5 lakhs, you will have to pay 5% tax, which amounts to 12,500 rupees. Please note that individuals with an annual income up to 5 lakhs are eligible for tax rebate of 12,500 rupees under Section 87A. Hence, for an individual with an annual income up to 5 lakhs, the net tax liability for the year will be nil. On any income between 5 lakhs to 7.5 lakhs, you will have to pay 10% tax, which amounts to 25,000 rupees. Similarly, on any income between 7.5 to 10 lakhs, you will have to pay 15% tax, which amounts to 37,500 rupees. Next, on your income between 10 to 12.5 lakhs, you will have to pay 20% tax, which amounts to 50,000 rupees. Thereafter, on any income between 12.5 lakhs to 15 lakhs, you will have to pay 25% tax, which amounts to 62,500 rupees. Lastly, on your income above 15 lakhs, you will have to pay 30% tax. Since your annual income is 18 lakhs, you will have to pay 30% tax on the remaining 3 lakhs, which amounts to 90,000 rupees. Finally, you have to sum up the amounts calculated for all the tax slabs to arrive at the total income tax payable. Income up to 2.5 lakhs, tax amount is 0. Income between 2.5 and 5 lakhs, tax amount is 12,500 rupees. Income between 5 to 7.5 lakhs, tax is 25,000 rupees. Income between 7.5 to 10 lakhs, tax is 37,500 rupees. Income between 10 to 12.5 lakhs, tax is 50,000 rupees. Income between 12.5 to 15 lakhs, tax is 62,500 rupees. Income above 15 lakhs, tax is 90,000 rupees. And finally, when you add up all these amounts, you will arrive at a total tax liability of 2,77,500 rupees. Thus the tax liability on your annual income of 18 lakhs for the year will be 2,77,500 rupees, and not 5,40,000, as shown earlier. Hope these calculations are clear to you. Also, these calculations are as per the new tax regime. Note that as per the Income Tax Act 1961, the new tax regime has lower rates for tax slabs, but you have to forego various tax exemptions and deductions otherwise available. Under the old tax regime, you are eligible for several tax deductions and exemptions, such as deductions under Section 80C. These deductions and exemptions help reduce the taxable income. However, these benefits are not available in the new tax regime. With that, we come to the end of this video. Hope you found it useful. Please check out our social media, and if you like the content, be sure to drop some likes, comments and share it with your connections. Thanks for watching.